Hello and welcome once again to a virtual investor event hosted by NZX. My name is James Sharp from the Capital Markets Origination team. A quick reminder that we're going to be hearing from 3 of our listed issuers this afternoon. Each presentation will be about 15 minutes long, followed by 5 minutes of Q&A. To ask a question, as a quick reminder, please do so via the webinar box. There is a chat function in there. Any questions we don't get to today, we will endeavour to get some answers over to you after the session. Fantastic. So first of all, a very warm welcome to Jason Boys and Philippa Harford, respectively the CEO and CFO of Infratil. Infratil has been listed on NZX for over 25 years with the core objective of delivering above average returns to shareholders over the long term. This strategy is driven by an investment portfolio principally in renewables, airports, as well as social and digital infrastructure businesses. Over to you, Jason and Philippa. I'll be back in a few minutes with some questions. Thank you.
Hey, thanks, James, and thanks to you and NZX for having us. As James said, I'm Jason, the CEO, and this is Philippa, CFO, and we're really happy to be talking to you about Infratil today. Hopefully you can see our slides on the screen in front of you. Oops, I've gone forward one. So I think that's a pretty good intro. Infratil is today an investor in modern infrastructure and is focused on 3 platforms really: renewable energy, digital infrastructure, and a kind of broad category we call social infrastructure. It's mostly focused these days on diagnostic imaging or healthcare. So Philippa and I are going to walk through why we like those sectors and why we're focused in them, and a little bit about the assets that are in there. But maybe first to start with some of the kind of vital statistics, if you like, of Infratil on this slide. So as James said, we've actually been around 27 years, so quite a long-term feature of the New Zealand investment landscape. We're listed on NZX and the other one in Australia. One thing you need to know about Infratil is that, like a lot of investment companies, we're managed by another company called Morrison & Co, which was founded by actually the founder of Infratil and Morrison & Co, Lloyd Morrison. So Philippa and I, for example, work for Morrison & Co. Infratil itself, as the investment company, doesn't have any employees. It does have a board of directors that are mostly independent, so they don't work for Morrison & Co. And it's their role really to sit between shareholders and the management company and make sure the manager, Morrison & Co, which Philippa and I represent, are doing what we said we would do for Infratil and for its shareholders. We're also significant shareholders in Infratil in our own rights, personally and as Morrison & Co. But that gives you a feel for how we're slightly different from other companies, but it's actually a pretty normal structure for investment companies. You'll see the same structure in the property space and other spaces. We're pretty big, so we market cap today I think is about 5.9 billion. It's pretty amazing because we started 27 years ago with $50 million. We are, I think, about number 6 in the NZX top 10, so 6th biggest in that index, to give you a feel for it. And we're pretty proud of our track record of returns as well. Since inception, over that 27-year period, I think our total shareholder return, so that measures share price growth and dividends, has been 19% per annum over a really long period, which, if you look anywhere in the world, whether it's at infrastructure or otherwise, is a pretty seriously good and enviable track record made right here in New Zealand. Actually though, our target return, what we try to achieve now when we set up our portfolio, the sectors we're interested in, the companies we're invested in, the amount of debt we take on and dividends we pay, what we're trying to achieve is a target return of 11 to 15%. That's between dividends and capital appreciation over a 10-year rolling period. As you can see, our track record is beyond that, and we'd like to keep that, but that's actually how we think about optimizing the portfolio and where we're invested to try and achieve that over the long term. I think it is worth emphasizing that kind of long-term orientation of Infratil, because it goes to why we're in the sectors we're in and why we're in the particular assets we're in, which I'll come to next. Let me see if I can click that along. So on this slide, we've tried to summarize exactly what Infratil's invested in, today. And we've split it between, we've got 4 boxes here, but we can kind of think of them as 3 main ones that we're really focused on today. You can see from this slide where most of our assets, that 55% under digital infrastructure, is the proportion of our assets that are invested in a group of assets that we call digital infrastructure. What is sitting in there is our 50% of Vodafone New Zealand, which I think this audience would know what Vodafone does. It also has about 50% of one of Australia's largest data centre businesses called CDC Data Centres. It's based in Canberra and is actually Infratil's biggest investment. We put $400 million, I think, into that investment, right, Philippa, in 2016-ish, and it's now valued at well over $2.5 billion. So it's been a phenomenal investment and a phenomenal growth period for that business. We're also invested in renewable energy. At the moment, that's a smaller proportion of the portfolio, about 20%. That's because we sold a big renewable energy investment last year. And now we're focused on investments in renewable energy developers in the US, Europe, and just recently Asia. And also we own 50% of what's now called Trustpower, which is sort of the 4th largest generator in the New Zealand market. And it is using mainly hydro to generate its electricity. So they fall within that kind of group of renewable energy developers. I'll talk a little bit about why we're in that sector in a second as well. And then we've been invested in Wellington Airport. I think it's, if not the oldest, one of the oldest positions we have. We have 2/3 of that, which sits in the portfolio and provides a steady income. And then the kind of last sector we're really focused on, and this slide pack is called social infrastructure, but sort of lately we've been really focused on investing in diagnostic imaging, which is businesses that you go to get an X-ray or an MRI or even more advanced types of scans. Radiologists work there and they read those scans and provide information to your other carers on what conditions you have and how you should be treated. And Philippa is going to talk about that sector. She's the director of one of those businesses as well. I think if you stand back from that, what are we trying to do here? What Infratil's trying to provide to people is a core set of largely defensive assets that will provide reliable returns that are reasonably lower or lower risk. So that's the defensive part, what we mean about defensive. So they're businesses that will, through most cycles, rain or shine, produce a sort of steady single-digit return for shareholders. We're also doing that by not only the individual investments we're in, but by diversifying across a number of those investments. So a great example really in this space is Wellington Airport, right, which historically produced really steady returns. The management team could predict what that company was going to return within, sort of $500,000 year on year. Obviously during a pandemic, airports are pretty well challenged, but then you had other parts of the portfolio really step up, and Vodafone's kind of really one of them where, and CDC's another where through the pandemic, we saw a lot of people moving online just like this, and a real big acceleration in those businesses. So they kind of counterbalance each other. So we're trying to invest in individual assets that have a defensive nature, but also across the portfolio, producing that kind of steady single-digit type of return through cycles. What we're also trying to offer is exposure to growth that produces higher returns at higher risk, but when blended with those lower risk returns, produces that target return we're talking about at the 11 to 15. So at that kind of higher risk, higher return end of the spectrum, you have things like renewable energy development. Those projects, the nature of that business is you're investing across a lot of individual little projects, but you don't know really which one is going to be attractive to somebody who wants it to be built or will actually ultimately be built. There's a lot of things that can happen in the life of those projects that can mean they just never get built. You might not have access to the transmission lines to connect that wind farm or that solar farm, or costs might blow out so that they're not economic to be built. That happens quite a lot. So it is a higher risk business, but you get higher returns. Across our renewable energy investments, I think we're in that kind of 25 to 40% return type range, which is quite high, but quite risky. So the idea is a defensive core with exposure to growth is really Infratil's central proposition and has been for a while. I think the last thing to note on the slide, right, Philippa, before we dip into the sectors, is that we're now providing and aiming to increase our spread across the globe, really, with these investments. So it's not just focused in Australia and New Zealand, which we have been in the past, but we're now developing renewables in the US and Europe and Asia. We've got a new data center business in Europe, which I can talk about. And I think you should expect that to continue to be a continuing feature of the portfolio, because we're focused in sectors that are global. We think our experience that we learn largely at home is translatable overseas, which we've proved in renewable energy and others. And it creates nice exposure to different growth drivers, but also that diversification I was talking about. One country isn't going so well, hopefully other countries will step up and pick up the slack in the portfolio. So maybe I better motor through a little bit. On this slide, I wanted to show some recent sort of 4 acquisitions we made in our core sectors. So I think the message here is the portfolio is changing all the time. It's quite dynamic. We're in quite exciting sectors where opportunities arise often, and we're continuing to find interesting ways to invest in them. Maybe I'll talk about renewables and then I'll hand over to you for diagnostic imaging.
Cool.
So in renewables, I mean, everybody knows the world needs more renewables. We've been developing them for over 20 years. We now have a pretty global footprint across 3 businesses, but it's easier to think of them really as one exposure to all those regions I've talked about before. We see opportunities to develop in all of those regions at returns that are really attractive. But what you really need to have to be successful in these places is expertise and capability. And so our approach really is to partner with teams that are on the ground in these areas. They like talking to us because we talk their language. We know what makes a good renewable developer in our view, and we find developers in the US or Europe or Asia recently who think similarly to us, have a track record of success in those markets and all the context you would need to be successful there. So recently we established a platform in Asia. It's actually headquartered in Singapore. There's a team of 31 out there now working away on projects from the Philippines to Japan to Vietnam and Thailand, for example. And we expect that, even though it's just started, to actually probably accelerate quite quickly over the next 12 to 24 months, because there's not a lot of other developers in that market that look like us. Europe is a bit different, it's quite competitive. US is very competitive, but we're established there. But Asia, it feels like we're getting there sort of nice and early ahead of a big crowd. So I would watch that one. We intend it to be a bigger part of our portfolio. I think we've built more renewables than surely anyone in this country, at least, over the last decade across a whole bunch of jurisdictions, and we will continue to do that. Why don't I pause there on renewables? I've talked enough. Maybe you can talk about diagnostic imaging.
Thanks, Jason. Yeah, so it's remarkable to think that this time last year we didn't hold any investments in diagnostic imaging. So in December we bought a stake in the Australian business called QScan, and that featured as part of our full year result. But since then, and in the half year to 30 September, we also acquired a significant stake in Pacific Radiology, which is a New Zealand business predominantly south of the Bombay Hills, essentially, and really the largest operator in that space south of the Bombay Hills. I'll talk a little bit about why we like that sector, but it's also worth noting that since then we've also had Pacific Radiology partner with Auckland Radiology. For us, that was really important, and we'd signalled at the time we purchased Pacific Radiology that, you know, a presence in the Auckland market was really important to us. So it was great to see that we were able to execute that, or that Pacific Radiology was able to get into that partnership. The thing we like about diagnostic imaging is that it's clearly an idea that matters. It has a significant impact on society in terms of the well-being and the kind of positive results you can try to give to people when they're ill. We do think that private sector has a part to play in that. You know, there's a lot going on, and even now, the private sector plays a role with the public sector, you know, so it's quite a partnership between the two. We see the opportunity also for quite a bit of crossover between those businesses. The radiologists and the staff are quite collegial. They can learn a lot from each other. We think there's an opportunity for something like a teleradiology platform between the two, which is essentially where scans are read sort of online and virtually, and it makes it a much more efficient process. So we see that as a really good opportunity. And I think the other thing to note is both of those businesses are still growing. So whether it's in Australia or whether it's in New Zealand, there's still further opportunity for growth, whether that is opening up new centres. For example, Pacific Radiology is opening up a pretty impressive clinic in Queenstown, you know, which has been underserved, you would argue, for quite some time with that growing population. And you can see the same thing happening in Australia for Qscan. So I think that's a brief comment on diagnostic imaging.
Nice, thanks, Philippa. So you can see a real defensive core. It's an essential service. We're all going to need to be scanned at some point, and actually, as we age as a population, we need it more and more. But also growth opportunities through some of the things Philippa mentioned. So right in our wheelhouse, we expect those sorts of investments to achieve towards the top end of our 11 to 15% range over time. Right? I know we're running short of time, but quickly on digital infrastructure, I do want to mention it is pretty big. So we're invested in Vodafone, which serves all of us and connects people. We're invested in CDC data centers, which is where the cloud and all of the stuff that we're using now lives in highly secure facilities. Our thesis here really is that will provide, again, it's an essential service, a nice defensive core, but it's clearly stuff the world will need more of over time. And but that will require investment, and that's actually what we like to see in our portfolio, things that we can continue to invest in to earn returns. Much easier to invest in teams and businesses you know than run around buying ones that you don't really know that well, which is always a little bit of a risk. So I probably leave it there. We have invested actually in London in a new data center business. It's a quite super interesting business. Unlike Greg's business, CDC Data Centers, which is massive in Australia and New Zealand, this is really more at the startup end, but what it is focused on is supercomputers, basically high performance computing. They have the UK's fastest supercomputer and NVIDIA one in that facility. And because they have like a big biosciences, life sciences research need in the UK and a set of businesses, they really need this type of business services. They'll be using more and more supercomputing capacity into the future. So again, I would expect digital infrastructure to grow in our portfolio. With pretty high conviction. So maybe, I think there's a return, but maybe do you want to talk about the dividend just quickly?
Yeah, I think I'd just note that we declared a dividend of 6.5 cents per share. I think it's pleasing to see, though, that was a 4% increase from last year. And we are signalling that we do have confidence that we'll be able to continue with a modest level of dividend growth. So, you know, that's at about where we've been at the moment. Has been about a 4% growth, and it's also pleasing to see we can now fully impute our dividend, or at least we have been able to for this time round. Yeah,
and maybe investment capacity while you're...
Yeah, just quickly, the investment capacity, we've got about 2 billion of available capital. That's sort of split between cash balances and available debt facilities. We've just done a full refinance of all our bank facilities, and we've now extended them out to 2026. So that's a good place to be.
Yeah, happy days for sure. Let me just quickly sum up and we can go to questions. Hopefully that's the summary page. So Infratil is a modern infrastructure investor. We're targeting 11 to 15% over the long term, 10 years. We're a mix of defensive, I think, businesses and a portfolio through diversification that should reliably produce a kind of single digit return, but we're seeking growth by getting exposure to higher growth versions of assets in those sectors, probably more globally over time, because that's where we see a lot faster growth often. We have put out our dividend and we have tightened our guidance. We think we've performed pretty well through the pandemic and we should get a bit of a bounce back, certainly at Wellington Airport. And we have that capital to deploy, which you should expect to be deployed in our existing businesses, then new businesses in the sectors we like. There's a pretty high hurdle to introduce a new one, but we never rule it out, and we always try to remain patient and disciplined rather than rushing around buying anything that moves. So maybe we'll leave it there and take some questions, James, if that works.
That does, and thank you, Jason. Thank you, Philippa. Great presentation. Really interesting hearing about the business, in particular at the end, that UK opportunity as well. Probably because that's where I'm from.
That is pretty cool.
Yeah, quite a few questions here. We probably won't get time to ask all of them, but I will dive in. So question one is, what is the future for Trustpower in your portfolio in its reduced form?
Yeah, well, we were advocates of moving it to a generation-only business. For people who don't know, Trustpower is going to sell its retail business assuming the court approval comes through to do that early next year to Mercury. So it will become a focused generation business. We think that will be inherently more valuable because they'll be able to focus on generation. I think of the 600 or so employees within Trustpower, 450 related to retail, but it was really only 20% of the value. So that gives you a sense of the focus that it can bring. We do actually think that it has a nice ongoing long-term role in the New Zealand power system because it provides hydro that's distributed that can help balance off renewables, which can come in on and off the system. So we're kind of midstream on figuring out exactly what that means for our position, but we fundamentally like it in the new form that it's going to be in coming from early next year.
Great stuff. Next question is how do you see international travel unfolding, specifically for Wellington Airport, which you sort of touched on, I think, to start of the presentation. Any thoughts on that?
Sure. So essentially the thing to note with Wellington Airport is its primary international travel is through to Australia, and that equates to about 1 million passengers a year pre-COVID, against say 5 million domestic passengers. We'd like to think that Australia, subject to things opening up, will come back relatively strongly, but I think like anyone or anybody, we'd be just wondering how long it'll take for that to ramp up. I think, there's a lot of pent-up demand. Australia is an easy place to get to, so we've got a reasonable level of confidence that as long as the systems, if you like, permit travel, then New Zealanders and Australians are going to want to take up that opportunity. So we'd like to see that it's coming back.
Yeah, indeed. Yeah, very difficult to know, but hopefully that comes back very quickly and internationally as well, of course. Sort of outside of Australasia. Probably got time for one more question, and just a reminder, we will get to all the questions we didn't get to today after the session. Question is here, how do you go about doing due diligence when investing in companies based offshore? Are there specific countries that you are looking at to invest more in?
It is a good question. So remember I mentioned Infratil is managed by Morrison & Co. Morrison & Co. actually has offices now in London. We've had one for three years there now. We have one in New York, which is actually quite new. And we will have one in Singapore. In fact, John T arrived there this week, from this week. So it is, to be fair, where you don't have an office in the country, a lot harder. And so almost all of those recent investments that we talked about took almost over a year to due diligence because it's been quite hard to get out there. But in general, we've done it in places where we could get to. So we could get down from London to Singapore in that period that we due diligence Gurin, the Singapore-based business. The data center business is in London, so we could do it from there. So in general, the ones we've done, we could get there, but it's still taken quite a lot longer. I think that's probably 3 or 4 times longer than usual.
Okay, great. Thank you very much. I think we'll leave it there. Just want to say thank you to Jason and Philippa. Fantastic to hear about Infratil this morning. Enjoy the rest of your afternoon, and perhaps see you in the new year.
Yeah. Thanks so much, everyone.
Great stuff. Okay, we're going to proceed on to the second presentation now, and we're going to hear from Rob Mitchell, CEO of Rua Bioscience. And just as he comes in a few minutes now, Rua Bioscience, who listed on NZX just over a year ago, is a New Zealand-based exporter of bioactive extracts and products. The team represents a leading voice in a fast-evolving industry with a strong commitment to helping the world access the power of bioactives for health and well-healing, sustainability, and innovation. Rob, I'm not sure if you can hear me. Just give it another minute or so. Oh, fantastic. And there's your presentation. We can't see you, but we can see the presentation. So great to have you on, Rob. There you are. Fantastic. And just a reminder to everyone, please do fire those questions through. And again, we'll get to as many as we can today. Over to you, Rob. I'll be back in a few minutes.
Okay, and you can still see me, I take it. So yes. Just our disclosure statement. A little bit about our background, where we've come from. I mean, Rua Rua Bioscience, as many of you might know, was born out of a desire to increase the well-being of whānau and the whenua by providing sustainable, safe and well-paid employment to all of the people of Te Tairāwhiti, but particularly in Ruatoria. The company was founded by Panapa Iho and Manu Keri with the support of the local community, and initially as Hikarangi Enterprise. Hot off the press today, Panapa was actually announced was a recipient of the 2022 Kiwi Bank New Zealand Local Hero Award. That's an award where 100 New Zealanders received the award, from which the Kiwi Bank New Zealand of the Year will be chosen. And we're very proud of Panapa and his achievements, and in particular, everything he does for the people of the Te Tairāwhiti region. Our vision is quite simple. It's to create cannabinoid-derived medicines that will change people's lives right here in Te Tairāwhiti, and we aim to be a leading New Zealand pharmaceutical company. Our strategy is clear. We look to be creating a unique product and plant IP. We aim to create sustainable and protected IP in both plant and cultivation techniques. We look to differentiate ourselves by developing commercially viable and unique varieties of cultivars, using notable research partners to develop this. I apologise, it seems you might be getting the fonts are slightly out of whack on this screen, but anyway, I'll carry on. Secondly, we're taking our IP and developing new products and markets, clearly creating new protected product formulations, developing new attractive markets, all critical for our future growth and achieving sustainable revenue, and to become a successful and sustainable company. Thirdly, a focus on optimizing cultivation and processing, achieving excellence in cultivation and processing techniques, using a network of capable grower partners to expand our production. And to deliver this, we of course need licenses and approval for all processed products and markets. And finally, and perhaps most importantly, developing our people, building a capable and committed team, flexible enough to operate on a global stage across multiple locations and business relationships, creating employment opportunities and pathways for Te Tairāwhiti residents so that they can develop skills and create new careers. Are you changing it now? As a business focusing on commercial unique cannabis cultivars, our crop growing program is an essential activity, and resulting genetics are some of the most important assets that we have. Our cultivation team blends the strength of our pharmaceutical expertise with the intergenerational knowledge of the East Coast growers to develop truly unique medicinal cannabis cultivars with a focus on establishing the commercially viable varieties we will use to create world-class Rua branded products. It's in Ruatoria that we grow product with a team of dedicated to indoor growing cycle that includes germination, propagation, vegetation, flowering, harvest, drying and curing. And one of our goals is to grow indoors to, we have to grow indoors to good agricultural and collecting practices, which is known as GACP, and also to dry product to GMP standards, all from this facility. Furthermore, we will and have begun exploring the opportunities to grow outdoors at the same facility. Here in Gisborne, at our manufacturing site, we manufacture medicines in our newly certified GMP environment. We take care of testing, packaging, labelling, storage and shipping. And it's also the base for our product development team and the home of our supercritical CO2 extraction unit. This unit allows for the production of products like full spectrum oils and potentially the opportunity to generate further revenue through toll manufacturing. In September, 2 months ago, Rua received Good Manufacturing Practice, or our GMP certification from MedSafe. This enables us to start manufacturing our first medical cannabis product, a cannabinoid oil. This was a major achievement for the company. GMP certification is the global standard by which all pharmaceuticals are certified, and it allows that Rua can manufacture, or means that Rua can manufacture, a consistently safe product of acceptable quality. GMP is a prerequisite for both domestic and export sales, and gaining that certification in just 12 months after commissioning our facilities at the same time when listing was a massive achievement for all of the team and a testament to some of the great work that's been done down here in Taurāwhiti. We are hoping to supply product to the domestic market early in 2022, and I'll come back to that later in the presentation. The lifeblood of any pharmaceutical company is research and development, and we're no different. At Rua, we've got trials that we focus our trials on is establishing commercially viable varieties, and we hope to create world-class Rua branded product. The Mangaporo-based team began commercial indoor trials last November with a selection of around 45 plants. In March, we selected 2 vigorous cultivars with strong flowering potential that perform well in our unique indoor environment. These 2 cultivars will likely become the backbone of our dry flowered business. In April, the cultivation team began to grow the first of many engineering and validation crops. Outdoor trials for the summer season have begun with exciting local expertise on hand to grow a range of Rua cultivars. And in June, we announced a groundbreaking 2-year research program to investigate the application of hyperspectral technology in cultivation and assessment of medicinal cannabis products. This is paving the way for Rua to enter into the medicinal cannabis testing industry. Key strengths of our company will include our brand and our kaupapa, our New Zealand exclusive sales agreement with German wholesaler and distributor Nimbus Health. That'll give us reach into one of the most advanced medicinal cannabis markets in the world, Germany. Our evolving grower partner network gives us the ability to scale cultivation capacity with very low risk. Our people, a highly experienced team, many of whom are scientists and leaders in their particular fields. I'd like to turn to give you a little insight into some of the markets in which we're going to be operating. The New Zealand market's not something we've spoken a lot about, but it's certainly one that we're committed to, given the heightened demand for medicinal cannabis products. Reliable data from of the use of medicinal cannabis in New Zealand is limited. However, recent data released by the Ministry of Health under the Official Information Act shows that a number of packs of medicinal cannabis prescribed and supplied in New Zealand is growing at a rate of about 250% at an average rate annually. The number of packs supplied in New Zealand in the year to June 30, 2021 was over 31,000 compared to just 2,000 back in 2018. This growth is in spite of access to medicinal cannabis being constrained by a lack of available products, limited prescriber understanding of the clinical benefits, and the absence of government reimbursement. While we won't be the first New Zealand medicinal cannabis company to enter the New Zealand market, the growth in the market shows there's room for a number of players. If we turn to the international markets, consumption of the medicinal cannabis is now legal in over 40 countries. The market is expected to be worth over $60 billion by 2024, and we have a clear path to revenue and an export-led strategy targeting major high-standard GMP medicinal cannabis markets, as well as ensuring New Zealand patients will be among the first to access our medicines. Germany remains a core focus, and we're actively exploring other international markets where our high-quality GMP-grade medicinal cannabis products have the potential to be market leaders. There's no doubt it's a challenging market and challenging environment. Whilst there's been immense progress in the legalization of medicinal cannabis in countries around the world, there's not one size that fits all approach to permissible products. Where medical conditions cannabis might be used for, or who can prescribe medicinal cannabis, or who even pays for it. At the same time, rules and regulations are changing and being rapidly and being interpreted differently. To overcome some of that, Rua works with a small group of international advisors to stay ahead of the international market developments, and we've positioned ourselves to capitalize on revenue generating opportunities. We have stratified target markets into Tier 1 and Tier 2 and are executing our business development plans in order to extend our distribution beyond Germany and New Zealand in the medium term. If we look at the German market, the German market remains Europe's most mature medicinal cannabis market and the largest single market for GMP pharmaceutical grade cannabis globally. The data shown on this slide is linked to the reimbursement market, which makes up about 2/3 of the German medicinal cannabis market. In Germany, can prescribe medicinal cannabis for a variety of conditions, and a great number of these prescriptions are paid for or reimbursed by the statutory health insurers. The public health insurance coverage of medicinal cannabis in Germany reached 90 million euros in the first half of 2021, with over 45 million of that reimbursed in Q2 2021. There's around 190,000 cannabis prescriptions were covered by the public health system in the first half of 2021 at an average of around 490 euros per prescription. And it's important to note that private prescriptions are not included in this data and are particularly meaningful in the dried flower category. From the outset, Rua's goal has adopted a capital efficient growth model with a view to establishing cultivation partnerships with third-party growers to cultivate and supply medicinal cannabis for Rua under an exclusive arrangement. In our view, this is the most efficient way to achieve scale and to ensure geographical diversification. Discussions continue with potential grower partners to expand cultivation capacity and to increase our biomass supplies. We already have 3 supply agreements in place, including one with our first local grower, Purangi Tawhiwhi Rangi, from the East Coast Cannabis Company. And we also have an R&D supply agreement in place as we look to test and develop different cannabinoid products. When it comes to people, Rua's recruitment strategy is focused on 2 equally critical components: building a course, a capable and committed team that will propel our company towards its commercialization goals, but also creating highly skilled and well-paid jobs for the people of Te Tairawhiti. And over the last 12 months, we've expanded our commercial capability with the appointment of Dr. Dawn Smith as our Rua Product Development Manager and Dr. Andy Grant, Rua's Chief Commercial Officer. But a focus on the best naturally creates great opportunities for people within the region as well as fun are looking for the chance to return home. And a great example of that is Len Walker, Rua's Cultivation Manager, who's returned to Te Tairawhiti after decades building an impeccable career in the dairy industry. We go to the finances, results at a glance. From a financial perspective, financial year end 21 was a very much focus on the development of our business as we work towards commercializing our first products. Our cultivation team has been progressing plant discovery project as we test, analyze our genetic stock ready for selection of our commercial varieties. Rua completed the year with net assets of 28.8 million, and this includes 16.4 million of cash and investment. So we're well capitalized heading into the next financial year. As you know, we raised 20 million at the IPO in October 2020. These funds have allowed us to continue our growth and progress our development of products and potential markets as we start to move into commercialization. Our financial year 21 results are in line with our expectations as we continue to invest in the development of our product portfolio as well as the certification for domestic and export product. The next step for domestic sales is the completion of MedSafe's new medicines application process and the Ministry of Health's quality standard assessment. It's difficult to know how long it will take to navigate that process, but taking into account the lessons we've learned to date, we are confident that these timeframes are appropriate, which will see us having product, as I said before, early in 2022. In terms of being self-sustaining, we'll need a number of different products in the market, including full spectrum oils and dry flower. Timeframes depend on the uptake of products, market, sales margins, and a number of other factors relating to the diverse product offering. At the moment, we're very comfortable with our cash reserves and the rate of cash burn. And while we do show an end of cash runway by December 23, this excludes any revenue, which of course will begin to occur in 2022. Okay, so in summary, before Rua starts its domestic sales, I think I talked about we need the MedSafe's application process from the Ministry of Health and Quality Standard Assessment. That application has gone in, and we hope to hear back soon so that our first product will be to patients in end of Q1, beginning of Q2 2022. Our first product for German patients is anticipated in late 2022. At the moment, we're comfortable, as I said, with our our financial situation. And I think to sum up, Rua is first and foremost a pharmaceutical company. Our first product will be selling early next calendar year. As I've described, our growing facilities are complete. Our high-tech manufacturing facilities are complete. We have a team of really highly qualified scientists on board to lead production and manufacturing. Our founder's dream is within months of becoming reality. The marketplace is growing strongly, but the body of evidence will continue to gain momentum. So we're quite excited about the opportunities ahead, and that brings me to the end of my presentation.
Thanks, Rob. Thanks very much for that. Great stuff. Great to hear how the business is going. We do have a number of questions. We'll try and get to as many as we can in the sort of 5 minutes or so. Question one, in the context of your primary your sort of exports internationally, what is Rua's point of difference compared to other overseas providers of medicinal cannabis?
Yeah, we believe that will be in a big part in our genetics, and the work that we're doing on those genetics will help to prove that. Clearly, a lot of what we do as a company in our co-popper and a genuine desire to grow and create opportunity on the coast. I think as companies look to be responsible companies, I think Rua was born out of the desire to actually create jobs. That's what started our company. So our brand story, our genetics, and of course the New Zealand story, I think, if you like, in markets like Germany where there is no New Zealand product as yet, all be critical to our success, as well as, of course, a good product.
Fantastic. Okay, great. Thanks, Rob. It's probably useful segue then on the kind of creating jobs perspective. A question here is, what staff required are the most difficult to recruit, I guess, in the industry widely and for you specifically?
Oh, that's a really interesting question, but you know, we've actually been pleasantly surprised of the caliber of people that we've been able to obtain. So I've actually got my Chief Financial Officer sitting next to me, Hamish White, and the most difficult person that we've had to find in the last six months was a financial accountant who was experienced in NZX. But Hamish, I don't know if you want to speak more to that, but that took how long in the end?
6 months to a year.
Yeah, but if you know people like Dr. Andy Grant, for example, you know, pharmaceutical experience across the board, you know, these sort of people are out there and they believe in the Rua story. They want to be part of the Rua story. It's what gets us up in the morning. It's what, you know, makes all of us strive to achieve what we're wanting to achieve. And I think for a lot of people, that attracts them to our company, and you know, Manu and Panapa can be very proud of what they've created in terms of that.
Fantastic. Okay, Rob, I think we're going to probably leave it there. We do have some more questions. We're going to shoot those through after the session and get those responses back to those individuals after, just in the interest of time. Great to have you on this afternoon, Rob. Fantastic to hear about the business. Enjoy the rest of your afternoon, and I'm sure we'll speak again on this platform in the new year.
Thanks a lot, James, and thanks for having us.
Thanks, Rob. Thanks very much. Fantastic. Okay, and with that, we're going to move on to the third and final presentation. And just in a few minutes, we're going to hear from Greg Smith, CEO of Bremworth. Hi, Greg. Good afternoon. Bremworth, listed on NZX for well over 3 decades, is a premium design and natural fibre company guided by finding a more sustainable way in all they do. They are proudly New Zealand's only 100% wool carpet manufacturer and also offer beautifully crafted rugs made to measure. Over to you, Greg. Back again in a few minutes. Thank you.
Thanks, James. Hi, everyone. My name's Greg Smith and I'm the CEO of Bremworth. Stoked to be here sharing with you a snapshot of our business, our vision, purpose and ethos, along with our priorities for this full year 22. Bremworth's an iconic Kiwi brand with over 50 years experience using New Zealand wool and spinning, tufting and manufacturing it into the most beautiful, high quality, carpet, and more recently rugs. This slide gives you an overview of the organisation. Picking up on 3 key points here, you can see we employ over 400 team members. We have manufacturing in 3 sites in New Zealand, and we have a relatively even dollar split between New Zealand and Australia. Key takeaway is the size of the Australian business today and the opportunity for growth over the next 3 years. Here you'll see on the left-hand side our financial journey. This is the 5-year financial journey. So with the last year being highlighted by a reset and a pivot, which I'll go into soon during this presentation, and this year and subsequent years ahead explaining our return to profitability. On the right-hand side, our full year 21 highlights are explained. The big numbers here for me, the strong double-digit increase in wool sales as a result of the pivot, and the $22.5 million in cash that we have set aside to fund the ongoing transformation of Bremworth from a manufacturer to a brand. Over the last decade, the rise of conscious consumerism has been noticeable. It started with organic food, and maybe I can tell a story about going to the supermarket myself, maybe more than 10 years ago, and seeing at the end of the fruit and veg aisle a table with a sort of an ugly looking fruit on it, probably lemons, and this really expensive price tag. And I thought, gosh, what's going on here? I mean, who's ever going to buy this? If you fast forward 10 years to say 2017, and Amazon, the digital online giant, purchases Whole Foods, the premium US organic supermarket, a physical presence. Why? Because the data told them that that's where consumers were heading. They paid $17 billion. Then came skincare. As people started to look at labels and find out what was in the products they put on their skin, this changed the way skincare was being developed and made. And that's evidenced by the organic skincare growth rate being twice that of traditional brands. And then came the huge wave focused on the environment, climate change, and the damage being done by humans with our addiction to petrochemical-based products made fast and cheap, polluting our air and our land, and indeed plastic finding its way into our food chain through microfibers. So with this raising awareness came the world's governments with legislation, climate emergencies being declared, and the banning of products. Probably most famously here, single-use plastic bags. Now, the carpet industry. Believe it or not, the carpet industry across the globe is dominated by synthetics, carpets made from plastic. Approximately 85% of sales come from synthetics, with just 15% coming from wool, and that presents a large opportunity indeed. Now, in July 2020, Bremworth decided to acknowledge these important facts and these big consumer shifts and ditch our own production of synthetic carpets along the way. Now, it was a bold move. Giving up approximately 50% of your business is never an easy thing to do. But what I can tell you is that we haven't looked back. We built a brand on wool carpets, and we're experts at making it, so it just made sense to make the move back to natural. Which brings me to our vision and purpose. Our vision is to become a global leader in designing and creating desirable, safe, sustainable, and high-performing natural interior solutions. And our purpose, that's to find a more sustainable way. This encompasses the relationships and partnerships we build, the fiber we use, how and what we produce, and importantly, the results we expect. Now, ultimately, our brand's brought to life by our products. We believe they should be 4 things: desirable, high-performing, sustainable, and safe. Now, desirable and high-performing will never go out of fashion for a consumer. Sustainable and safe has become something that's relatively new, but you can see the impact that this combination is having with brands. And most recently, when you think about a Kiwi who's really made it on the world stage, Tim Brown with Allbirds listing on the New York Stock Exchange, taking a brand from 2016 as a startup to 2021, in 5 years, a $3 billion brand. So Allbirds make a beautiful wool shoe. I'm wearing them now, and that is something which has changed the game for that particular business. Just going back up to desirable and high performing, if you think about this with another big brand, you'd look at Tesla. So Tesla's seen as an electric car maker. Now, they weren't the first to do it, but they were the first to make it cool and to make it go fast from 0 to 100 in 3 seconds. So this combination of design elements are the success formula for Bremworth as well. What you'll see on this slide is our growth strategy. Grow the wool flooring market. So at the moment, as I pointed out, it's dominated by plastic, it's dominated by synthetic carpets. There's a huge opportunity for Bremworth to eat into that as consumers become more and more aware of what's on their floors. And COVID and people spending time at home like I am right now, you spend more time looking at what you're surrounded by, and natural products are becoming more and more desirable. Second, grow our share of the market. Currently, we're a big player in New Zealand, but we still have the runway to grow an enormous amount in Australia, and that's evidenced by we believe we can grow by around 300 doors there, and that's part of expanding our presence as well. And lastly, our design-led innovation. Consumers love new, and our disciplined approach to our product architecture will see us continue to lead the market trends. So shifting to our priorities for this full year 22, creating demand for Bremworth branding product. So firstly, as I mentioned, it's our job to raise awareness of what it is that goes into your carpets and that they're not all created equal. So for us to do that, we need to ensure that the consumers understand that wool is a high-performing, natural, biodegradable, and renewable alternative. And that second, we want to capitalize on Bremworth's quality and desirability and that reputation. We're as good as anyone in the world at making carpet, and we've been honing that expertise over the last 50 years, as I said, making our products right here in New Zealand, using New Zealand wool, and acknowledged by winning the Reader's Digest Most Trusted Carpet Brand 8 years in a row. Now, all of that is really important, but ultimately making profit and sustainable profits in the medium to long term is our huge focus. So from an operational and a commercial perspective, we are absolutely focused on improving our margins and reducing costs. So we're committed to doing this over the next 3 years, and we'll do that by investing in our product design and our brand marketing. And we're already seeing momentum and margin growth this financial year, despite the last quarter's COVID interruptions, and it highlights that importance around continued investment in the brand. At the same time, to become a truly great company, we need to be nothing short of excellent at manufacturing. We're laser focused on reducing our manufacturing costs, and we'll build on our already significant investments in plant, machinery, and technology to lift our productivity. And while we've got good operations today, continuous improvement is the key to repeatable and sustained results with our high standards. We currently have capacity to significantly grow our yarn manufacturing and carpet production, and they're constrained only by labour challenges, particularly in the Hawke's Bay, and we'll all be aware of these well-known challenges. And that, we're addressing this because this is one of my personal priorities. So our yarn and manufacturing plant managers report directly into me. From a commercial excellence perspective, we're thinking about how we present our brand in store. We're going to strive to be consistent across the various consumer touch points, whether it's online or in person. The experience has to be exceptional, and it needs to be reflective of our brand promise. We'll be selective in how we distribute our products and continue to review our network to ensure we support those retailers who truly support us, creating a win-win for Bremworth, the retailer, and ultimately the consumer. Now, people have always been at the core of our business, and we've got a history of supporting equal pay and a culture of ownership. So we're looking at new and flexible ways of working that are increasingly sort of appropriate today and acknowledge the shift from how people work. We're committed to growing our people with development and training, and we're nearing the launch of our first Bremworth leadership program involving just under 20% of our workforce. And of course, we'll continue to encourage and support our teams to gain certification under the NZQA manufacturing frameworks. The third point on here that's important is around supercharging our digital strategy. Now, what does that mean? Well, we're shifting to become a consumer-centric business model. We will be led by digital, a direct-to-consumer rug business. That direct online business helps us to learn fast from behaviours on the website and interactions that we have with our customers directly. We'll work out how to tailor the business to best satisfy their wants, needs, and desires. We'll use those insights from digital marketing and our rug business to distill learnings about who our consumers are and how and what they want to get. So through understanding our customers better in this direct relationship, it'll lead to an enhanced consumer experience and ultimately more satisfied Bremworth buyers. Now, the trend for hard flooring is going up, and it looks set to stay. And of course, rugs play an important and integral part in this flooring style, adding softness, warmth, texture, and design flair to people's homes. So we plan to amplify that rug business significantly and expect online sales to double this financial year. We'll invest in our team to ensure we have expert people in place who understand the opportunities and create a great business platform for us. So over the medium to long term, we'll capitalize on this new revenue stream with the potential to expand to other products and international markets. And lastly, for our strategy this year, a prioritization of innovation, sustainability, and partnerships. Our business is underpinned by the belief and commitment in doing good for people on the planet, as you heard in our vision and our purpose. And so to support our sustainability journey and bring it to life, we've launched a $4.9 million sustainability-based research program focused on reducing our company's carbon footprint, using more natural solutions, and finding new innovative ways to manufacture our products so they're better for people and the planet. Now, the development teams that work for us are always exploring new and cool ways to bring beautiful products into people's homes, and sustainability is intrinsically linked into this. So we're looking at things like natural dyes. We're looking at how we manufacture in a low and carbon environment. So we recently obtained an ECHA grant to change the gas dryers in our Whanganui plant to electric as part of our carbon reduction initiative, and we're looking at doing the same in our Napier plant. To give our consumers certainty about the integrity, traceability, biosecurity, and animal welfare of our wool products, we've recently signed up to the New Zealand Farm Assurance Program. So before long, 100% of our wool will be sourced from NZX accredited sources. New Zealand farmers, we know, already produce some of the lowest carbon wool on the planet, and some of our wool growers are approaching a carbon zero position. So we're not afraid to challenge ourselves and have set ourselves the goal to bring to market a carbon zero wool rug within the next 2 years. On top of that, we're also looking at how we can recycle and reuse our products with potential opportunities including carpet backing, insulation, and acoustic wall panels. So the sustainability journey is evolving, and it's a true long-term commitment. So for us, in summary, Bremworth has a clear purpose-led strategy. We'll capitalize on those consumer and macro trends that I've highlighted. there's a big opportunity to grow market share, and we're well capitalized with money in the bank to execute our plans. And lastly, and really importantly, we've got an ambitious management team, a very supportive board, and a team of people who are disciplined enough and skilled enough to make this strategy come to life. All right, over to you, James.
Thanks very much, Greg. Great stuff. Really fascinating around the kind of sustainability, particularly that objective of moving into carbon zero. Great to hear that. We do have a few questions here. So question one is, with the contraction of global supply chains, how do you see this affecting your business?
Yeah, well, as you saw from that sort of overview slide, a big part of our business is in New Zealand. Australia is where we're seeing some of that constraint at the moment, mainly due to some probably increases in shipping prices and some delays at the ports. But a lot of our, well, most of our business is in Australasia, and we're able to sort of insulate ourselves against that at this stage. We have 3PLs in Australia, which means we can keep the stock in market once it's there, and we can feed the supply chain through that. So whilst it's disruptive at the moment, and it's probably going to continue to be disruptive, it doesn't necessarily need to impact our overall plans or guidance for the year.
Okay, great, fantastic. I think second question, you did allude to sort of people being at home, COVID sort of effect, and so this question is kind of in that vein. What is the nature of the relationship between your revenue and the wider macroeconomic environment?
Well, for us, I suppose what we've seen is, particularly in New Zealand and Australia, is this, this boom in building, and that in turn has meant that people are looking at, and COVID has meant that people are looking at their floors every day, like myself, and we're thinking about what we'd like to do and how we'd like to spend our money. And so we're seeing, strong demand across both countries for Bremworth wool products. And as I said, that macro trend around natural products and surrounding ourselves with better, or sort of less products at a higher quality and better products is certainly, we're seeing that come through in our sales.
Interesting. Okay, great. A final question to you is, any thoughts about moving into additional sustainable fibres that can grow ecosystem value from your mill assets, such as fine (flax, linen), which is vegan and at a value chain level carbon extractive?
Yeah, so we are looking at all of those things, and including using fine wool as well, so including using merino. But we have a vegan rug which is in our pipeline. So all of those things that have been mentioned are all part of finding natural fibres, not limited to wool. And I've come from a textile background at Icebreaker, and we were using other fibres as well there, and so wool carpets and natural fibre rugs and carpets are a big part of our plans over the medium to long term.
Great stuff. Greg, I think we're going to leave it there. It's just after 3. Great to have you on this afternoon. Great to hear about Bremworth. See you in the new year, no doubt, as well. Thanks, Greg. And just to conclude, a big thank you to all of our presenters this afternoon, as well as our audience. For those of you, once again, that we didn't get to your question, we will get an answer over to you in due course. And see you again very soon for the next virtual investor event. Have a great afternoon. Bye-bye.